Hey, hello and good morning, everybody. Hi, this is me, Darius from Easy Markets, and this is a quick video preview for the Daily Picture International, which I run every morning. However, today is a special session. We're starting this one a little bit later, half an hour later, because I have a special guest. I had this guest before. We really had a great, big blast. We had a great sessions, multiple, and we're having one today again. I have my friend, my guest, Cristian Delle Fratte here with us on the Daily Picture International. So we're going to talk markets. Hopefully you'll enjoy the session. Stay tuned, and I'll see you in a bit. All right, okay, ladies and gentlemen, hello and good morning. This is me, Darius Anucauskas from Easy Markets, and today is the 22nd of August, 2024. So, yep, welcome everyone. Welcome to this Thursday's morning session, and it's a special one. It's a special one once again because we had these special sessions before, and the reason why it's special because I have a guest once again, the one that you have already seen probably if you have been watching my shows before. But yeah, I'll just quickly remind you that I have Mr. Cristian Delle Fratte here with me today. So, but before we go into all the market talk that we're gonna do, we need to quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll just give you a few seconds to read the rest. I'm not going to disappear anywhere. So, yeah, I'll just wait until you read everything, as always, and we can continue. Okay, so now then, also just before we jump into the charts, just let me quickly show you the website that we need to have a look at, as always. Just bear with me one moment. Let me flick around with my screen here. So yes, our Easy Markets website, you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Now then, ladies and gentlemen, let me just fix up everything. All the, you cannot see me yet, but let me just fix my camera. You can see that Cristian Delle Fratte is on wait right now. Ooh, there we go. There we go. Can we see now? And there we go. Cristian, can you see me? Can you hear me? Please show up. Please show up. So there we go. There's
Good morning, everybody. Yes, I see you.
As usual. So we're gonna have a beautiful session. We're gonna talk markets. There is a lot of things to talk about, or a few things that we want to talk about. Look, Cristian, thank you once again for joining in. Like I said to the viewers before, we're gonna try to do this on an occasional basis. Basically, we're gonna try to do this more often. I think we had like great sessions before, so hey, why not to continue having those? So yeah, look, I think that you all know already who Cristian is. I don't know, is there any point in introducing yourself again? I really don't know. I think that it's all okay, maybe, you know.
I'm not so famous, but I believe they remember about me.
Look, without further ado, let me just jump into the first chart and we can kick off. Let me just yeah, jump into the tab here. There we go. So I don't know if you can see it here. Yep, can you see it? There we go. There we go. Let me just double check everything is if running. Ladies and gentlemen, by the way, we have a live chat as well. So if you wish to participate, if you have any questions, honestly, feel free. We'll be more than happy to help out. As I keep on saying, if we know the answer, we'll tell you the answer. If we don't know the answer, we will say that we don't know the answer, but we will research and we'll find out. So yes. Right, now then, the first one I want to pick up here is Nikkei 225. Let me zoom in here a little bit. Look, from the technical perspective, I mean, this one's, for me, it's very interesting because we are near key resistance, and I've talked about this before, so this downside line is quite a good one. In general, we had a good recovery here. And it seems like the Japanese Nikkei here, it seems like it wants to go higher here again. It seems like it's ignoring the a little bit of a shitty trade balance that they had yesterday. So they came out like the expectation was that they're going to have like minus 330 roughly billion yen in deficit, but they came out almost double than that. So, but the market seems to be it doesn't care. It just wants to push higher. I think that it's mainly a reaction to the what's happening in the U.S. I think there's still positivity. I don't know. That's my view. Cristian, do you have any opinion on this, or you know, or what do you think?
Yeah, I believe, Darius, we are now going into 1 week, which will be very interesting in the market. Actually, it was all the August interesting, but tomorrow with the Jackson Hole, I believe we will see what's going on in the market according to the words of Jay Powell.
Yeah.
So in general, Nikkei is the all index still below the level of resistance and still in somehow technically still short. It's the only one actually,
Yeah.
and maybe a little bit the DAX. All the others seems to be ready to go to new all-time high. But I will be very careful because, as I said, tomorrow is a turning point because with the review of the job that actually yesterday were very, very bad. I mean, almost 1 million of job in America that are actually fake. They mistake just 1 million of job. So now maybe we will gonna have on the table for sure one interest rate cut, but maybe there is a chance that Powell will put on the table even a double cut, so it's 0.50. This, in my opinion, can influence all the market, including Nikkei, that actually is so far from the United States.
Yeah.
But yeah, I believe tomorrow and the no-farm payroll of next week will be a turning point. So if the market want to continue to go up, most probably we need to wait these two events, tomorrow Jackson Hole and then the no-farm payroll.
Well, in that case, I mean, jumping into the U.S. indices, I mean, this is what I'm seeing right now on the Dow. Okay, from my side here, I mean, on my technicals here, I can see that we're getting a bit of a resistance here and near this downside line. But yeah, okay, I hear what you're saying about the possible 2 rate cuts, but do you actually think that they're gonna do that, the 2 cuts? In my opinion, look, I think that by the end of the year, they're expecting right now what 4 cuts. I mean, before we had 5, now they're 4. I think that okay, he might continue saying that, you know, yes, we're ready to like continue cutting, but then if the stock market, you know, continues to rally, then I think that this will diminish very quickly into 3 cuts. I mean, in general, I don't think that they're gonna do like 1 cut in September. Yes, for sure.
For sure.
2 cuts in September, it's like I think it's overstretching.
Yes, actually, if we look at this picture, that is nothing is reasonable. First of all, beginning of August, when the job report came on the table and the market started to be afraid of recession, we had this big drop, this huge drop on the stocks. And that moment, the market, as you mentioned, price 5 cuts. Now, I mean, last meeting, Powell told in September, we are going to see if we are going to cut 1 time, 2 times, or even never. It was last message in end of July. So to come in September with 0.50, it means that or you mistake totally in July not to cut, or the market is actually deteriorating and collapsing the job market very fast, which is very bad for the stocks. So once again, I don't believe in double cuts. If this will happen, it's difficult for me to justify this market on the top, or at least it's difficult to justify the continuance of this rally, because it means that the economy is fucked up. Let's be clear. At
Yes, yes, yes.
0.50
True, true.
in September reminds me to 2007. No cut in July, and then in September, double cut. And then we know what's gonna be what happened actually after end of September and beginning of 2008. So I hope it's not gonna be like that, because I don't believe the market will react very good, because the market will really price the recession in this case. So yeah, I'm agree with you. I believe more in 0.25 with actually an indication of continuous path of decreasing. So yeah, 3 cuts for me now are the most probable
Realistic.
output. Yeah.
Yeah, yeah. Like in general, like I said, I think that as I talked about this in my previous sessions as well. It's like you're having a great tool, that where you can promise people, say that yeah, we're gonna do 5 cuts, and you boost the stock market without actually doing anything. So you just promise. And then, when the stock market kind of rallies nicely, then you say, you know what, I think that like that many cuts is like too much. And then, the stock market goes down a little bit. Then you say, you know what, we'll support the stock market. We'll do the, I don't know, 6 trillion cuts or whatever. Yeah, yeah. And then the stock market goes up again. So it's like, it's always like this game that, without doing anything. And I think that at this point, yes, the Fed is already pressured. They have to do something. So enough of these games. I think that, look, either like do something or like, give us a clear indication, because I totally agree with you as well, because this, I mean, okay, we might go for another all-time high, but it's becoming a little bit over expensive or something like that. Again, maybe I'm wrong, but maybe like this over expensive is relative, like it's subjective in a way. Like, what is over expensive? Is gold at 2,500 over expensive or not? So this, I
No.
get it. I totally understand this logic, but still, I think at the moment, at this period of time, I think we are a little bit, overstretched. Maybe a nice correction back down could be possible. However, how like can this correction back down, can it be maintained? And or actually that's it. Even if it collapses, it collapses. That's, unfortunately, I cannot answer this for now. I go from day to day. But yes, looking at Dow here, I would like to see here a nice good push higher, but a break of a nice clearance of this downside line, and then maybe a retest of these new all-time highs, or creation of a new all-time highs. But hey, the market doesn't always do what I want it to do.
Yeah. Also, let's not forget that usually September is a bad month for the stocks.
Yeah.
So we had these 3 days, and I cannot believe that the correction is finished. But I also think that the Federal Reserve put his finger on this correction and doesn't want the market collapse before the election. I also have this idea, especially on the 5th of August when the Nikkei collapsed. Actually, these indexes, they went down for 1-2 hours, and then magically they start to go up. This magically is actually the Federal Reserve that intervened and buy the stocks, I believe, 100% on this.
Yeah, true. No, I mean, I think, yes, they cannot allow the stock market to collapse. They probably, if Trump wins, then they will, then they will collapse.
That's my biggest concerning. Are they gonna do a trap now? So then the market is not going up, and then after the election, everybody's thinking about the rally, and instead it's not gonna rally at all. So that's why
Exactly.
we need to be very careful in the market.
Yes, true. You know what? Let's. By the way, in terms of economic data, if everybody's watching, yes, the main point, as you already, Cristian, mentioned, the Jackson Hole. Today it kicks off, and tomorrow, yeah, Fed's Powell is taking the stand and is going to deliver a speech. Of course, apart from that, we do have some new home sales. Maybe not much interest, not as interesting as Powell's speech or anything, but still something to keep in mind, to keep an eye on. Right, from the US, let's jump into Europe and the German DAX, one of our favorite ones. And for me, from the technical perspective, what I'm seeing here is a nice rebound. So nice rebound from this downside line. And in a way, if just to exclude all the fundamentals and just look at purely at technicals, then I would say yes, more to the upside. And in general, I would love to see also like a push back to the 19,000 zone on the futures here I'm talking about, or even above that. But again, there are fundamentals involved, and we do have. By the way, we had this week the Eurozone CPI. Which didn't really come out as something like extraordinary. It came out as expected. Whereas that was on Tuesday, if I'm not mistaken. Core inflation there 2.9 and the headline inflation 2.6 as expected, basically so slightly creeping up, but still kind of remaining near the same level. I don't know, but we saw the market on Tuesday on the German DAX kind of reacting negatively to that initially, but yes, I think everybody passed that, and now everybody's focused on what's going to happen from that Jackson Hole. What do you think on DAX? Still somewhat bearish, or
in general, yes. What is interesting now to understand what's going on after all this blue candle, so actually the drop that we had in the beginning of August will be covered, and we are actually almost there, because this is the future. So I think it was like 600 and something. On the cash was 510, and it was actually covered exactly yesterday. So this was predicted. Why? Because usually when we have such a huge drop, all this inefficiency, they are covered also very fast, even though it takes like 2 weeks to be done. But we had plus 8% in actually 2 weeks. So this is a huge recover and very fast recover, because the market seems to be immortal. Now, in order to see the new time high or actually a double top, yes, I need to go above the level that you mentioned, because it means it's not only covered the inefficiency, so all this huge drop, but the market is aiming to go higher. If I see a break above this level on the future, 600 and 50, 680, then I believe there is no obstacle anymore to go to see a double top, which will be surprising for me, but the price action of the market suggests at the moment this option. The only thing can change this output is tomorrow Powell that says something that in somehow scary the market. I don't know, puts fear in the market. I don't know, maybe he can mention that the job is slowing down more than expected, that the chance of recession are coming on the table. I don't know, something that actually will totally start a new cycle short. Other way, maybe we can aim to see really double top, and then in September we will see, because really this year it's a very, very strange. I don't remember a correction in August 3 days. I don't remember actually a trend that is so strong like we had this year, that is corrected all in 3 days. This will be something that remain in the history. I don't remember something like that. I remember something 2015 when China had the trouble in real estate, and we had 2 days like that. But now, really, in the last 10 years, I don't remember. It's really, really particular to see a correction 3 days during the summer. So no other bottom in September, no other bottom in October. It really sounds very strange. But at the moment, or it's a big trap, and now Powell is going to put some petrol on the fire, and the trend will restart.
We have a question actually from, I just noticed that we have a question from one of our viewers, Yezalel. Hi, thank you very much. First of all, thank you very much for tuning in. I really appreciate that. And the question sounds like this: with the currency market attempting to abandon the dollar at the center, wouldn't any Fed rate cuts accelerate this process? With the consequences for bonds and equities. So I'm assuming, so basically the question is like, if we do more cuts, I mean, and everybody's trying to abandon the US dollar, I mean, then yes, the dollar could start dropping. That's a good question. Honestly, very good question. Of course, if the more cuts could weaken the U.S. dollar. By the way, let me just jump into DXY. We're seeing, yes, continuation move lower here. At some point, yes, I mean it will, but eventually, I don't think that in any time soon it will start abandoning. That's my point of view. That still, I think the dollar could remain and hold its status as a safe haven. Yes, there will be some weakness, but when everything will start going down, I think people will pick up on the cheap US dollar. And maybe in some years later on, yes, maybe it will something will change. But in the near term, in my opinion, that the US dollar right now is drifting lower. It's getting weaker. Yes, maybe some are not happy about this. The rate cuts, yes, upcoming rate cuts could continue pushing the dollar to the downside. But then at one point, if let's say dollar, I don't know, drops below 100 somewhere, some people might say, hey, actually that's maybe it's still valuable. I mean, it didn't really disappear or cut its value like overnight. No, it's still going to be valuable. Still, there's like a lot of countries that operate in the US dollar, and it will pick up. I mean, at the moment, yes, we're seeing declines, and I think that we could eventually drop below that 100 level somewhere here. But is it gonna just push everybody away from using US dollar? Even in my opinion, even like China, Russia, Saudi, they still have value in the US dollar at the moment. Of course, they try to move away from being dependent on that currency, and which is fine. They're introducing, maybe yuan as a mean of exchange, which is fine, which is normal economy. The only thing is that do I think that the US dollar, will collapse significantly? No, it will weaken, yes, but will it collapse? No, I don't think so. And in terms of equities, in my opinion, okay, at this point, when I'm seeing cheaper US dollar, that means that it kind of is somewhat boosting exports, US exports. And I think we talked about this last time with you, Cristian, that it's right now it's yes, I mean the main US export probably is our weapons, and they're in demand right now. So why do you need a strong dollar for
Yeah.
for that? So you don't. So that still could boost the stock market. Lockheed Martin, Raytheon Technologies, and all those stuff. They could still benefit. So again, but that's yeah, Zalel. That's my view. Again, Christian, what do you think? I mean, in terms of
Yeah.
abandoning the US dollar in
Look,
total.
I think the same. And actually, I don't know if we will jump on euro dollar, but the chart on euro dollar is telling exactly what you have now talked about. Because, yeah, we see finally a euro which is stronger than dollar, and we are on the high of the year. I believe, yes, there is still a possibility to go up above 112, even 113. But in general, as you mentioned, the dollar remain a safe haven. And if we're gonna see the economy slowing down or any other geopolitical event, the dollar will be always on the table. So, in order to
Mhm.
answer, yes, it will deteriorate very much. Or, for example, on the chart euro dollar, I need to see a break above 115. Then, if it goes above 115, yeah, exactly that maximum, the 2012. Then we can say that actually the dollar is losing attraction and is losing the main uh, player in the market as safe haven. But
Yeah.
until this doesn't happen, I still believe this can be temporary because of the many the rate cut. Don't forget, guys, that usually the market anticipate. So in these 2 weeks, in my opinion, the market is anticipating the fact that it's gonna be rate cuts more than predicted, more than expected in July. So we need to be careful on the buy the rumors and sell the news. I
Yeah.
believe we have still space, but I don't believe on euro dollar to go above 113, 115. Absolutely.
Yeah, I mean, like I have some of these here targets. I mean, from my end, from the technical perspective, I'm looking at this 1.1140 zone, which is the highest point of December of 2023. At the moment, I'm really curious what's going to happen here. Are we going to just hold on to it above it, or are we actually going to just create a false breakout here on the weekly chart and just correct back down in let's say in the near term? But at the moment it seems like still positive. It seems like yes, this area is still holding. I think that the next target, which is the highest point of July of 2023, around the 1.1275, something like that, could be a nice good target in general. I think before, let's say, before going down. And I like your 1.15 territory, because basically that's around here somewhere. Where, let me just grab this one. There we go. 1.4. Okay, 1.15 roughly. Yes. So that's the highest point of February of 2022. Yes.
I don't believe I don't believe to go there, but yes, the range is exactly these two top, 113, 115. This
Yeah.
is the level where usually the euro dollar react, and also usually we have a top in July, August. So it's not strange to see a top of the year in July, August. So I will be very careful, because many people now, maybe let's assume that Powell will confirm the interest rate cut, even put something on the table like possibility of 2 rate cuts. We see 112. I'm not gonna buy the euro 112. At least I will expect a correction. And sometimes people buy on the news. We
Yeah.
experience 20, 30, 50, 60 pips, and then they enter on the top, and the big shark start to go down again.
Yeah.
So yeah, we have some space, but in order to see really something strong on dollar, we need to go above 113, 115.
True, true. Yeah, I agree with this, because it kind of comes in line with also with this US dollar index here, the DXY. Because again, I'm still leaning. I'm leaning, really leaning towards that psychological 100 level, and I think that that could be an interesting area. Certainly for me, that could be even more interesting if we actually drop below the lowest point of July of 2023 in general, or actually, sorry, the lowest point of 2023, around here near the 99.27 ish, something like that. Or actually, you know what, not 27. I think that's more 2020, something like 2022. But yeah, around here basically. If we do start clearing this territory, then yeah, great. I mean, great probably for the bulls who are waiting in line, when to kind of jump in. But at the moment, yes, I think that this could still drift lower in the near term. So, but will it get abandoned totally? I don't know. Not yet. Something really radical has to happen in the economy, that something like this could be. I mean, slow shifts away from dependence of the US dollar. Yes, that's happening. But it should not be mistaken with like just total abolishment of using the US dollar. Yes, Alel. So I don't know if this answers your question, but thank you very much for the question. We really appreciate that. So yes, ladies and gentlemen, if anybody else has any more questions, feel free, drop it in there. Like I said, if we know, we will answer. If we don't know, we won't answer. But we'll come back to you later. Look, you know what I really want to jump into right now, and I mean, one of the pairs as well. Another pair, which is USD JPY. Where is that? There we go. So USD JPY, for me, this is a little bit of a mystery at this point. It's okay. Are we seeing? We're seeing a strong stock market in a way, ish, like on paper, on the screen, right? We're seeing, but the yen is starting to kind of pick up downside momentum again. And sorry, the other way around. USD JPY is starting to pick up downside momentum because the yen is getting a little bit on the stronger side. So, but then my question is actually, is this an indication that we are ready to shift to the downside in the stock market, and everybody's now slowly jumping into the yen again? or actually is this just going to be like something of a double bottom here, where we're going to rebound, the dollar will strengthen, but let's say coming back to the point we already just discussed about the US dollar more weakness, I think that this is looking a little bit more bearish. But again, the question for me still remains: is this bearish on the USD JPY? Is it because, let's say, everybody's jumping into the Japanese yen right now, or actually is just because the dollar is weaker and that's it? So and that's why we're seeing this this effect. So that's where for me it's a little bit okay. I see that the US dollar is weaker. But at the same time, I do believe that the stock market can correct back down. So that's where the confusion for me is happening. Are we actually seeing people jumping into the yen slowly, or what do you think, Cristian?
Look, I think that it's a mix of all what you mentioned, but the most important is that the market is not believing on the fact that everything is okay. So in general, this is very, 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 very important for me to look to understand what's going on in the future. And together with the oil that most probably we're gonna see, they are telling us be careful because maybe there is something in the economy which is worse than what we are thinking. So job report, US. Then we have China that's using less, demanding less oil. Then we see this appetite for the yen. All this together let me think that maybe there is a chance of last quarter which is not as expected. And yesterday, also in the minutes of the Federal Reserve, they mentioned that they expect the growth to be a lot less than before for the last quarter, for the second part of the year, actually. So all this on the table, plus of course the weakness of dollar, is boosting all this USD JPY. But then the oil is another story. Maybe also the geopolitical is influencing. But at the moment, yes, the alert I have on the market is also depending on USD JPY, which seems to restart the downtrend. So the yen is getting stronger. This makes me feel that the market doesn't finish yet with a correction.
Okay. No, makes sense. Because for me, like I said, I'm watching this one, and it's really like I said, slowly getting confusing. However, you switch your emotions off, and you can put a cold hat on, and you evaluate this way. Right. Okay. Look, a few more pickups on here on the forex side, and we can jump into commodities very quickly. So, any specific pair that you're looking at right now? Maybe something apart from euro dollar and USD JPY.
Me?
Mm-hmm.
No, usually I look on the pound also, GBP.
Yes, let's have a look at that one actually. So GBP USD.
Yeah, this is very interesting because actually it seems even stronger than euro dollar because we are closer to the top of the July more than the euro, and a lot of analysts are predicting that this pound will be the currency of the last quarter. I don't know, but actually it's interesting to see that it's faster than the euro, which is already strong. So I don't know. You are closer than me to the economy in the GDP. I don't know if you see any fundamental reason for a.
Or look, the only thing is I'm trying to understand. I mean, I'm trying to kind of, well, not trying to. Sorry, but I'm thinking that it's due to the fact that right now, this one, what's his name, Kier, this new prime minister, Starmer. Yes, there we go. He came in. I think that they're right now not really doing much spending. Actually, that I think that what they recently they started cutting more, trying to cut here, and this way maybe they're trying to support the economy. They're trying to make the pound look stronger. Basically, boost people's lower down inflation, of course, and kind of boost people's purchasing power. I think that's they decided, I think, to go this other way. Instead of, let's say, giving a lot here, and there. No, they decided actually let's cut here, and redistribute into that sector, and that sector. So maybe that's where, like I said, this positivity is also coming in. I can't remember what were the recent inflation numbers from UK, but anyway, but that's what I'm seeing right now, and this is how I'm seeing. Of course, the weaker dollar is helping as well. People are kind of enjoying the moment right now. That, like I said, I think it's more of a political thing right now happening in there, because the new party came, the new leader came, and let's show that we mean business. Because if they suddenly, let's say, kick off their rulership with even higher inflation, then I mean, I think that this is where a lot of people would be unhappy, because it's already getting like way too expensive. I think the whole goal is to make the consumer happy for now, to lower down prices and in the shops. So basically, yeah, making the pound stronger a little bit. Yes, from the technical perspective, I kept on talking with kept on saying I was aiming for that psychological 130 level. We cleared it. 130 and a half, we cleared it. Yes, now it's the next target is the highest point of 2023, near the 1.3141 zone ish, approximately around there. So that's what I'm going to aim for now, and then we'll see. Because we're then of course jumping into something more beautiful on the upside here, maybe something like something around this 1.37. One thing that I did not research yet, I think I read it a long time ago, and I think that the optimal level for British economy to run is like when the pound is like around 150 to the US dollar. But again, that's maybe old news already. I need to refresh on that, but that was before, I remember. Now, like, if we're below 150, then basically it shows that maybe like exports are not attractive. The pound is way too strong, and like Brits cannot export too much. So now it's like. Or on the and now or actually on the contrary, no, it's what am I talking about? I think I'm talking nonsense right now. Wait, if it's lower, right now the pound,
No, it's okay. I mean, if the power get too much strong, then
yeah, that's what I'm talking about. Yeah, sorry, I mean, I'm talking nonsense, because if it's gonna go above 150, then the US dollar is the pound is way too strong. So yes, so below 150, then it's kind of your pound is strong. Your exports are not exports are attractive, on the contrary. Yeah, so I'm getting into this circle myself, honestly. Like, I'm getting mixed up with this. This is what the problem with the economy sometimes, when looking at this, you get mixed up with this very easily. So right now the exports seem to be attractive, but now I think the goal is to make people more happy. So you need to kind of boost maybe the pound a little bit, but again, it's always a balance. Do you have anything else to say, or we can jump into our next?
Yeah, I think everybody's wanted to see gold and oil, at least
Oh,
gold.
yes. So look, with oil, I was just briefly showing the chart. So yes, oil is yes, amazing. I mean, it is beautifully going to the downside. I was still bearish, and I'm still bearish in oil. I will be probably targeting areas like here, the 67.7 zone. And then, of course, something around 63.66 zone, somewhere around here, basically. So these are my beautiful targets. But again, before we can reach those, I need to see some clearances here. I need to see some clearances. Currently, we're getting a nice hold up near this one of my other levels here, the 71.41, which is the lowest point of February of 2024. Yeah, I mean, then the lowest point of this year has been here, near the 69.29. So we're not far. And I think that there is a good chance we could actually drop below that 69.29 zone. Again, what's your opinion on this?
Look, as I said before, this is another indicator which is crazy, because last week we had minus 9% on oil and we had plus 9% on stocks. So, a part of the geopolitical issue, oil is an indicator of the economy, because oil is just demand of oil and offer of oil. When we have a high demand, it means that the economy is doing very well. So we can expect oil to go up, and the stocks to follow. Of course, not when we arrive to 120, which create huge damage on inflation. But at the current price, 70, this is mostly an indicator of the economy. So usually all these big drop on oil are following by a drop on the stocks because it means that the economy actually is slowing down. Uh, we broke the level of June. Sorry. So yeah, I believe we have still space to go down, and if the recession will come, at least a light recession, uh, I believe oil can go further down, which will be very good also for the inflation
Yeah.
because it will definitely cool down all the inflation, the one that remain. And we are around 3% in US and 2.6 in Europe. But this is not a good indicator for the economy. So if we continue to drop on oil, then I expect also the stocks to follow. So
Okay.
that's very interesting. And I think this asset together with USDJPY is anticipating something that we still don't know, and maybe tomorrow we will know.
Yeah. Okay. Okay. No. Good. And of course, our beloved yellow metal. So we talked before, like 2 weeks ago, and we were still here somewhere. We were still here somewhere. Me and you were saying that yes, we were targeting the upside, 2,500, quite probable. It's very nice level. We reached that. We overshot that. We went even further. So what do you think? Let's say this is maybe a little bit of way too far of a problem, like how to say it, a guess or something like that. But what do you think? Are we done for this year with the rally? Do you think that, let's say, 1,000, or do you think 1,600, 700 are just like the next steps this year by the end of this year?
Look, my target of 2,500, which was crazy a few months ago, has been reached. So for the short-term perspective, I'm now out of gold. I remain long only on the instrument which I have for long terms.
Yes.
This is for me very similar to euro dollar, the situation. So yeah, we can have maybe even 2.6, 2,600.
Yeah.
But in general, if I see at euro dollar, if I see at gold, I see really a similar pattern. So as I mentioned before, I think we can arrive to some level which is attractive then for a correction. So the 112, 113 on the euro dollar could be the 2,600 on the gold. But once again, as I mentioned in all my webinar and also with you, this is a long-term trend, on my opinion. So any correction is an opportunity to increase the position. This is on my opinion. It's not an investment advice, but I said this at 1,900, then at 2,000, 2001, 2002, 2003. Now I say short term, I'm gone. I'm not gonna continue to hope for a trend that will continue never ending. But on long term perspective, I still have the idea that in 2-3 years we are gonna stay above 3,000. This is my opinion.
Okay. Nice. I'm just trying to play around here with the Fibonacci extension, one of my favorite ones, and basically I'm capturing the lowest point of September 2022, the highest point of May of 2023, and then the lowest point of October of 2023. Again, it's very subjective, it's not objective, but so far it seems like the levels here have been playing out nicely. The 100% here was around 2,277. It provided fantastic support from which we rebounded, and it seems like the 161.80 is near the 2,565 level. Okay,
this looks to me a wave, Elliott wave, and I believe this is a wave 3. So then we should have a wave 4, a correction, and then a last wave 5 before a bigger correction. But some people say no, this can be even the 5 because the 4 we did already. But it's
because it depends from where you measure it. For example, if you measure it from, let's say, from this point here, The lowest point of October of 2023 all the way here. Let me just draw these trend lines. So if, let's say, this is wave 1, this is, let's say, wave 2. This is I'm not a huge fan of
This is
Elliott
the
waves.
wave of the third one.
Sorry?
Exactly. I believe this is wave 3 and it's built exactly like this. Though that's why I said I believe now we are done, because this is 5 wave but into a biggest one, which is the number 3.
Okay, because again, I'm not a huge Elliott wave fan.
Me too.
But
I just I just
yeah,
see
yeah,
that.
yeah.
I don't
know.
follow this, but in general, yeah, sometimes they
Sometimes they do work out. So again, it really depends how you draw it, how you measure it, and yeah. Okay, look. What can I say? I'll remove everything. I'll jump back into the daily chart. So yes, what can I say? I mean, there is still potential for the upside on this one. For me, let's say if I just removed all my previous drawings, but let's put it this way: if we start dropping back below this kind of previous all-time high near the 2,483 zone, then I'll start considering maybe slightly lower levels in the near term. But at the moment, of course, everything's looking quite positive. But still, for me, whenever we start hitting these new all-time highs, I still need to see a break of the current all-time high in order to get comfortable with some higher levels. At this point, I'm just observing the price action, not really doing anything. And finally, just for dessert, our favorite beloved Bitcoin. Yes. Okay. Look, overall, from my side, overall, a falling channel. We are trading within the falling channels here, which has been running from the beginning of March of 2024. Okay, beautiful, fine. After we've tested the lower side recently here in the beginning of August, we rebounded. I mean, we created a nice, beautiful false breakout here. Well, almost a false breakout. Rebounded, pushed higher strongly, and then we started correcting back down. This little correction back down for me looked like a nice bullish flag, and so far it seems like to be kind of working out. The only problem that I have is, for me, this is very risky here. I would prefer actually to wait for a push somewhere above the 63,000 zone right here, because at the same time we would be above my EMAs, and then yes, this could open the door towards the upper side of the falling channel, because let's not forget, while we remain inside the falling channel, this trend is still to the downside. However, we look at the prevailing trend is to the upside, so the logical breakout here from this channel could be to the upside. Again, purely technical. What's going to happen from the fundamental side, I really don't know. If there's going to be like a drop in demand, but at the moment, I think that the weaker dollar, if the dollar continues to weaken, I think that this could be like a good opportunity for, you know, for crypto lovers. But again, that's my opinion only. I mean, going from the technicals here with the fundamentals, I'm struggling at this point. What do you think?
I think that we are now in a situation of no trading area. Yesterday, I had a discussion with a guy that is following all this cyclical analysis on Bitcoin, and he said to me, he was the only one actually. We are gonna go to 40,000. Forget about new top on Bitcoin. I didn't say that I think the same as him. Otherwise, I will give him too much too much power. But in general, same story. I believe we are waiting too much for the new all-time. So I'm not gonna trade this asset at the moment. I'm not gonna short Bitcoin because this is something crazy, on my opinion. It's very risky, but I will not be surprised to see again a downtrend.
Yeah.
The area that you mentioned is the area that we need to pass at least to go to see the 70. But I'm not the one saying we are gonna do 100 for sure. The minimum we did. I need to see confirmation, because for me, this can be not only a bullish flag, but also correction, which is taking more time than usual, because at this price, the correction cannot be so fast like before. When the Bitcoin price like 15,000,
Yeah.
you know how much. I mean, it's a big amount of money that go out, but not like now. So now, to see a big drop, we need to see a flow which is huge. But I cannot think about the 49 we saw is the minimum, and I will be sure to see 100 now. I need confirmation, and at the moment, I don't buy at this price. I will buy if we go above, below 50 once again, or better to go even below the minimum that we see. I think also is connected with the stocks. If the stocks will drop again, most probably also the Bitcoin will drop again. Other way, to see a new time high, we need to see much more evidence that now we don't have.
No, good opinion. I mean, I am like right now. I'm like, I don't know. I'm looking at this one very short term. I really, at this point, I would probably look at it more long term if we have like a nice, decent, strong correction back down. But even then, you evaluate like why it corrected, why it's dropping so heavily. So, but anyway, at this point, like I said, I'm cautiously bullish, but I do hear what you're saying. But yes, I mean for me, like I said, I would love to see this breakout here above the 63,000. However, I'm gonna get bearish if we do drop and stay somewhere below the 53,000 zone. I'm gonna consider slightly like lower levels here, going below the 50,000 zone. But again, that's me. Everybody has their own opinion. So yes, let's see what's gonna happen in general. Right, Cristian. I think again we had way too much fun because time flew like crazy. We will have to wrap it up here. Ladies and gentlemen, I hope you enjoyed the session. Thank you very much, whoever was watching. Yazalel, thank you very much for your comment. Really appreciate that. So, next time, ladies and gentlemen, we're gonna, I don't know, next Thursday or what's happening?
Yeah, we can do that. I
We
believe.
can do
Yes.
next Thursday. Yes. So, ladies and gentlemen, we'll confirm that. You can check out Easy Markets channel. So yes, subscribe, the usual stuff. Follow, subscribe, and because this way you won't miss the upcoming events. Again, if we're gonna have a session, then we'll have a session on Thursday. So yeah, Cristian, once again.
Thank you, Darius, and let's enjoy Jackson Hole, and then we see, because each week we have a different scenario on the market, so nobody knows what's gonna be next Thursday, the day before
Absolutely.
November roll, actually.
Absolutely,
No,
absolutely.
the
True.
day it was gonna be
So,
no, the other
and
Thursday.
on
Okay.
and on that note, I'll stop presenting here very quickly. Now we can be enlarged and on bigger boxes. So yes, and on that note, ladies and gentlemen, thank you very much.
Thank you,
Yazalil, I can
Darius.
see
Thank
you
you
there.
all.
Have a good day.
Have
Cristian,
you
have a
good
good day as well. Sorry, I interrupted you, but yes, have a good day. Thank you very much, ladies and gentlemen. And yes, so as always, I keep on saying, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. So I'll see you tomorrow, 6 o'clock GMT time, at my session, my own session, Daily Pitch International. So yes, you can join me there. We'll pick up on the market events, and yeah, hopefully you'll enjoy it. So I'll see you tomorrow. Bye-bye.